Hello, I'm Phoenix,
I'm Eric.
and we're gonna pitch Toyota Motors to you guys today. So if you aren't aware of who Toyota is, it is a automotive vehicle and parts manufacturer. It was founded in 1937, and it's actually a spinoff of his father's business, Toyota Industries, which was a large, just machine. Like they made a lot of looms, I think that's what he made. And they also conduct other business in like finance and stuff like that, but that's not what we're focused on today. They conduct business in 190 countries and regions around the world. Their four main markets are Japan, Europe, Asia, and North America. Their three most concentrated vehicles, I guess, is the hybrid, conventional, and the fuel cell. They have two subsidiaries, Daihatsu Motor, which is they make all the mini and compact cars for them, and then Hino Motors, they make all the large commercial vehicles. And they are also the sixth largest company in the world by revenue. So right now it is currently trading at $119.51. The year high is $138.68. The low is $111. They have a large market cap of $195 billion. Then they currently have 1,600 million shares. And this is, so the blue one is Toyota. The green one is the automotive industry. You can see that it, for the most part, stays very well above it. And then the red line is consumer discretionary.
So Toyota is an innovator. Since World War II, they've been the main producers, or fundamentally, they use the Toyota production system, which is a derivative of the Kaizen system, which is a traditional Japanese theory of waste mitigation and management, and they apply that better than anybody to any project. And in fact, in some of our classes, you'll hear about the Toyota production system and lean principles, and they do this better than any other company as far as I've read. And we're pitching a buy based on the fact that we think that Toyota is on the verge of actually breaking through in a lot of industries where there's a lot of competition, but they're going to be able to do it better than anybody else based on their strategy. We have the old strategy here, which means
which they used for 8 decades, which was basically just sell cars and make profit. And he's recently realized that that's not, like, in order to grow in the automotive business nowadays, it's not so much just selling cars, but it's selling everything that goes with cars, like, you know, everything that the consumers want as well.
And this represents a fundamental shift in the way that like automotive manufacturers deal, moving away from just like more units equals more profit. They're actually looking towards new avenues to generate revenue as we move into an age of ride sharing and self-driving cars potentially. So they came up with the 3-arrow strategy, which is standardize, value creation, and collaborate. They have some notable collaborations across the globe, and these are going to be some of their key partners for moving into the future of what they are trying to produce. So standardize and value creation. They're focused on the trend of big data, basically collecting as much data as they can from all of their fleet and their various partners' fleets, and the cars provided to their partners' fleets. And they're trying to generate a comprehensive database. What exactly they want to do isn't exactly clear, but they definitely have used their data that they have collected during natural disasters to provide alternative route planning for emergency vehicles and other cars when there's like some sort of road blockade or collapse. They can reroute people based on the data that their cars have collected over the years. So we have a lot of collaborations. We have Uber, Get Around, Tokyo Taxi Hire Association, Grab Holdings, and SoftBank Corp. Uber, everybody knows, they're a ride-sharing company. This is a relatively new collaboration, but basically Toyota is trying to gather data from all of these cars and then learn from their mistakes and try to provide what I can tell is a better self-driving car somewhere down the line. And we'll get to that a little bit later. Get Around, which is keyless vehicle sharing. It's actually like Toyota was one of the first people to implement a smartphone key in their phones. So this is actually transferable, so I can send you the key and now you can get in my car and pay me a sum of money to drive my car for a day. This is one of their partners, and so they're getting data constantly, more so than your typical daily driver would provide, and a different demographic than your 9-to-5 office worker. Tokyo Taxi Hire Association, Toyota actually provides a lot of the taxis in Japan, and so they provide some of this fleet, but now they're working towards making a self-driving pilot to be available. They would like to have the pilot fleet ready in the next 5 years, with a timeline as short as 2021, but within the next 10 years is their goal for most of their self-driving capacity. We have Grab Holdings, which is basically a Singapore Uber. They serve South Asia, and they basically do the same thing as Uber, but in a different market. And we have SoftBank Corp, which is, as I understood it, to be Internet of Things, and they are basically taking all of Toyota's big data and then running it through analytics to try to sift out different useful KPIs and other such things that they can apply to whatever their projects are in the future. And it's with all of these companies that they're working on their e-pallet concept, which was revealed, I believe, earlier this year or last. And basically, the e-pallet is what Toyota sees as a potential concept car of the future. This is your mobile office, your mobile gym, your bus, hotel room. It could be whatever you want. It's basically a room on wheels, so you can be traveling to and fro. Think about like an RV with no driver, but you can put a gym or a restaurant in it, and it can go wherever it needs to be. Grocery stores, logistics. It is literally an open source platform, the way that they would like to use it. Obviously, none of that technology is ready, and we've seen with various ride-sharing services that have tried to develop autonomous cars that hasn't worked out so well.
I will say though that Toyota is different in the fact that they've never tried to promise anything. They're just simply putting their ideas out there. They're not, you know, I think that's what kind of sets them apart from everyone else, is that everyone else is making promises that, you know, they can't keep. So, Toyota's profit and loss. So, up here I included the revenue because you can see in 2017 there was a large, well, I wouldn't say large, but there was a pretty significant dip, and January 12th of 2017, actually, Toyota announced Takata, which is the people who provide their airbags. They did a recall for basically any time airbags got hot, they would explode, and so that did a pretty big impact on their revenue in 2017, and it actually just got recalled again earlier this year because they pretty much just put the same thing in all the cars, just with a different material. So they had to recall all of the same vehicles and everything. And that's like 65,000 cars is what it said. And then I also wanted to know, at the end of 2017, beginning of 2018, there was the big tax reform where they decreased corporate tax rate to a flat 21%. This is lower, but it does it means good things for the consumers because they're not having to pay as much.
So Toyota's a Japanese company. The US is undoubtedly one of their large markets, but it's probably not anywhere near a majority of their sales. So do you think the US tax rate is gonna be the #1 driver of what their global tax rate is across the business?
I mean, I guess I don't know. I mean, they talked about it in the 10K, so I just,
I think
or if
Toyota-
they don't have the 10K, they have like
Especially with Uber being largely based here, like some of their key competitors being based in the US, I think it's something that's on the radar. They do 30% of their sales in North America, and then the majority comes from Asia, with a large portion coming from Japan.
Yeah, all I'm pointing out here is that for a company that earns most of its revenue in the US, it's easy enough to say this is the US standard corporate tax rate, let's plug it in. With a company like Toyota, where only 30% of their revenue comes from the US, you'd probably want to get a more accurate assessment of what their tax rate would be, because they're being taxed in a lot of different countries that have different rates. Okay?
For financials, so for inventory turnover, they have, they're one of the highest out of their competitors, which we'll get into, which is one of their, it seems to be decreasing a little bit, but for the most part, they said it's one of their biggest, one of their biggest assets, I guess. Operating margin is also the largest out of all of the competitors. They're very efficient. That's one of their main mottos, is being efficient. And I wanted to note that in 2017 to 2018, the earnings per share increased quite a lot, which made their price per earnings go down almost 19%. And then their price to book ratio I found a little interesting, because what I'm getting from this is it's basically saying that the price, that the market holds it at, is the same as the book, which just from looking into the company, I don't see how that's true.
Okay. A couple things just from both this chart and kind of some of the other charts I'm seeing here, on the way you use data, a PE ratio is not a dollar amount, and some of these I find if you don't use commas or units millions, it sometimes becomes really hard for me to read and look at trends, and I'm pretty sure I'm not alone. So I'd be careful with the way you format data, just to make it understandable for the end user here. And as for why they trade close to their book value of assets, I don't know, I'd probably make that a little closer to. I'm sure they have a fair amount of heavy industrial kind of facilities, because they're a manufacturer first and foremost. But I probably would expect them to trade a little bit higher on book value.
So one of the biggest things about Toyota is that it holds a lot of debt. It's not on this slide, it's on the next one, I believe, but their debt to equity ratio is almost 100%. So they're pretty much just every year they're just getting more and more debt to finance all of these new upcoming ideas. And so because of that, they have a really low current rate. They have just as much assets as they do liabilities, so their current ratio is not very well. You want it more towards 2 instead of 1, because the closer it gets to 1, the less likely they are to be able to cover their liabilities. But it's very consistent, and I don't think that's something that they're going to have to worry about going into financial trouble, because they can't cover their liabilities. And then And then they also have their debt to enterprise value is pretty much 0.5 consistently. And yeah.
Toyota's also about to undergo consolidation in their new, it's an initiative within the company. It's called their Home and Abroad strategy. And so it's basically moving their facilities around. They're going to take some of the U.S. facilities and consolidate them into one. They're also going to move some of the production across the world locally to the Toyota plant in Japan and move out of some different areas. So that should help move the ratio.
Okay, so they're consolidating manufacturing facilities? Is
That
what
was in
you're
their 10Ks,
Okay.
like an initiative that they have.
So, more than half their sales are from Asia, and then a third North America, 15% other. In Asia, is it primarily Japan? How much exposure do they have to emerging markets, or do they sell into emerging markets?
Yes, and so 40% is Japan, and then the rest of that is going to be China and other emerging markets from the
And then you just highlighted a bunch of different things they have going on. The automotive space is kind of an interesting industry right now because there is quite a lot of change. I just read this article about it, which I'll send to you guys. And they use the acronym ACES to talk about the things that are happening in the automotive space. So it's autonomous vehicles, connectivity, electrification of vehicles, and then shared mobility, so like ride sharing. And you guys kind of hit on almost all of those. But it's hard for me to tell from just the kind of qualitative discussion how Toyota is doing compared to its competitors, and not just other automotive companies, but now you see, say, Google making autonomous vehicles. You see a variety of different players in other industries starting to get involved in like connectivity, industry of things. So there's kind of an influx of new competition or new players that might be viewed as competition. So I want a clearer picture, not just of Toyota's own initiatives, but kind of where they stand positioned relative to the competitors on all of those 4 big issues.
Yeah. And competitors is actually next for us, and these competitors, we didn't look into any competitors in any of those industries, but we just took them straight from the 10K. They listed all of these out. So that's what we compared it to. Just a little quick rundown. Hyundai is a South Korean multinational auto manufacturer. Kia is the second largest behind Hyundai. Renault is a French manufacturer. Goat is also a French manufacturer. I don't know if I pronounced that right.
Peugeot.
I knew I was gonna say that. And then Volkswagen is a German manufacturer, but it's also the largest. So, looking at these, like I said, we took the competitors straight from the 10K, but looking at the numbers, there's no real, I can't really see why they would pick these. For example, like the market cap for Toyota is significantly bigger than all of the rest of them. Their debt to equity, like Ford has almost 430%, whereas Toyota has 99%.
So who would you have picked for comps if not these?
Well, I would have to look into it a little bit more, but probably like more of the, I would say, higher end brands.
So these are the comparable companies. Like these are there's a few that we can swap out in here. GM and Ford are very related, but like these were the comparable. Some of them are from the Bloomberg, but a lot of them we actually went out and looked for just because Toyota has such a high market cap and they're such a large manufacturer. There aren't a whole lot of companies in the same category. Like there's nothing really close to the same market cap or share price.
So they're large, I don't think these are bad comps, I mean, some of them, there aren't very many like pure play, like higher end car companies, to be quite honest, like a lot of the brands you think of are probably owned by some of these companies. Like Toyota itself has several brands under the Toyota name, right? I mean, I'd probably discount some of the, like, there seems to be a bit of a bias towards Europe, and I'd probably look more closely at their Asian peers. I'd want to see, like, Toyota owns Nissan, I believe. Is there a...
Nissan might be under Renault, actually.
Okay, because I'd want to see if there's any other Japanese company whose primary market is Japan, and that might also be good to pull that out since that's their biggest market. Same comment I gave to Ben, which is I think you might have changed some of these metrics, inventory turnover, operating margin, but there might be some other metrics you want to look at. Let's see, we've got debt to equity. And it looks like, well, you might want to read into what their plans are with their debt, but it doesn't seem like they're wildly out of line compared to the rest of the industry. And you might want to look at, since you seem to have some questions about the price to book ratio, compare it across these and see just kind of what you see. So you guys mentioned recalls, like, what is their supply chain risk? How are they dealing with that? Because this has come up a couple of times for Toyota.
Are you like referencing like the trade war or
No,
like
so
that kind of stuff?
supply chain risk, as in they rely on Takata to provide a certain part. What happens when Takata doesn't provide a quality part? Do they have, like, what are the source airbags, or do they just have to recall everything once they're?
I mean, I didn't actually look into their supply chain. I know Toyota does a lot in-house from what I can tell, and the whole principle with their Toyota production system is if they did detect a problem early on, they'll catch it before it gets to recall point. And that was like a big play as opposed to their competitors who will, Volkswagen is known for skirting emissions and things like that. Like same thing with Ford.
I mean, Toyota had issues with their brakes not all that long before the VW scandal, and yes, Toyota is a brand, we associate Japanese companies with like Lean and Six Sigma manufacturing, but they're hardly the only ones who do it these days. So I'd probably dive a little deeper into that to see if there's any kind of history of like issues with their supply chain, which means when you source a part or rely on someone else to do it, then you're taking on the risk that they may not be doing it to your standards. The other alternative is to do it in-house, and a lot of automotive parts don't have great margins, so automotive manufacturers rely a lot on suppliers. So you take on, it's either take it in-house and have lower margins, or outsource it and deal with the fact that you're now relying on someone else to do something and you haven't done to your standards. So how do they deal with that issue? Just kind of their governance and their policies are probably something to look into. Questions from the class?
So, given that Toyota is one of the largest automobile company in the world, why would you want to invest in Toyota over other automobile companies?
Because they're the biggest in the world. That was our main proposition. Is just the stock price is a little unsteady now just because of the political economy globally with the steel tariffs coming in and out, and the trade war kicking up. But overall, they have the scale to do a lot of these projects that they are undergoing, and based on what their competitors are doing, I think Toyota has the scale to actually make them happen, and they are a fairly reliable brand, and I don't think that they're going to rush the timelines in a lot of these. Their ETA is 10 years out, as opposed to like a lot of companies I know try to do it now, and it hasn't exactly worked out for them.
So, is that sure, over-promising and under-delivering is never a good thing, but is it attractive to invest in a company that you don't think is on the cutting edge?
I think they're on the cutting edge. But yeah, I see what you're saying. Like they are promising a very attractive timeline. It's not short term.
So I'd say, I think if you guys did a little more research, you might tighten up your story a little bit about how Toyota's positioned, like if they really are on the cutting edge or not. You know, if scale is really a great benefit or not, like there are a few things where I think there's still a few questions. Questions, comments?
Yes.
No, go Charles, go for it.
A couple times you guys mentioned they were getting 40% of their sales from Japan. Is that 40% globally, or is that 40% of their Asian sales online?
It's I believe it's 40% of their Asian sales.
And then the pallet, the driverless bus thing, are they, who's their market for that? Are they trying to make one and sell it to Marnie and John and me and Tim, or are they trying to sell it to as a replacement for buses or food truck owners, or do they have something like that?
So it is a really wide market, because potentially if you needed an office on wheels, yeah, they'd sell it to you. It's like a car that goes with you, but they do want to sell it to grocery store owners, and they would ideally like to sell it to logistics companies, food truck owners, restaurants. They pitched an idea where you could have a mobile sit-in restaurant where you go around the town.
So I'm not sure if this was the Toyota technology, but there was a pilot in China where like you could order on your phone, like I need a convenience store to show up at this corner. And so it's literally like bringing the 7-Eleven store to you, and then you go in to this nearest convenience store, which was kind of an interesting idea, but probably not close to commercialization.
And then with that, Toyota's not really known for computers and cybersecurity. That's obviously something they're gonna have to focus on more. Are they gonna just acquire that by hiring people, or are they gonna go out and, being in Asia, it's a big hotbed for technology, are they gonna try and buy a smaller company that focuses on security for driverless cars, for the keyless swapping, things like that? Because if somebody hacks into that, that's probably really bad for them.
So they've had a lot of companies do this now with Toyota's not the only one, not going to stretch the word, but they've been doing it for quite some time, so I think they might have that system kind of locked down, but then that's where some of the partners come in, like I know SoftBank was handling a lot of their tech-related things in terms of going with the data, so they might have some security with them.
Yes.
Given that Toyota is an automobile company, how do you think it fits in our portfolio?
I think we just wanted to pick a automotive industry.
Yeah, we don't have.
Like it's very, based off the graph, it looks very steady, and it doesn't, I don't feel like it's gonna.
Toyota is a very strong company, and at one point was outperforming the discretionary as a whole. close to 5 years ago. But a very large company, and they're relatively stable. It does fluctuate quite a bit. If you watch the stock price, it's kind of cyclical, but it is on the bottom end of what their trend is, and it's kind of swinging back up again. So we thought it fit well in the portfolio. It's kind of a diversified risk. They are a large company, and if we did run into economic troubles, there's a good chance that they would likely still be around, and it exposes the automotive industry in a different way than our tire investment